So far, I've had an absolutely phenomenal week, and I've been focusing so much on trying to trade less and less with max 5 to 6 trades per day. And in this video, we're going to go over Robinhood, which was a $16,442 profit that we called out for free on our X account slash Twitter. And if you guys aren't following me over there, I highly recommend you do it because it's much faster and easier for me to update you over there than it is on YouTube. But what I want to do in the video is go over why we entered this position in the first place, why I went with the amount of shares that I went with, and more importantly, why I closed my trade today. Because instead of just closing the entire trade like most people do, what I like to focus on is scaling in and scaling out of positions. And so we're going to go over all of that right now. For those of you who do not know who I am, my name is Peter DiCarlo. I've been a full-time trader for the past 9 years, and I make these videos because they would have been monumental for me when I first started trading and investing. Take a look at price action right now for Robinhood. The platform that we will be using within this video is called TrendSpider. This is a charting platform that I also like to use TradingView as well. With TrendSpider, you can actually set up trading bots that will enter and exit based on your entry requirements. And you can see here that a couple of days ago, we had a very solid entry on Robinhood on June 5th. This is when I entered my position. And the reason for that is at the time, price was trading above the 11 SMA and above the 50 SMA. The other thing is that the RSI was also increasing. This is what gives us this entry condition on the 15-minute time frame. But if we were to go over to TrendSpider and zoom out a bit, you're going to see that Robinhood as well was testing off of our market bias, which is this green ribbon that you will see here. The market bias is my favorite indicator. It is one of the simplest indicators to use, and we even have a completely free course showing you guys how we were able to lock in these profits in the past 6 months, mainly using the market bias. I will put the link to this course, which is free, in the description, and we'll go over it in much more detail. But when price is trading over the market bias, as you can see, we are in what's called a bullish expansion. Last time, this was nearly 61% within 58 days. And then once we broke above most recently, we have pushed up about 27% in the last 22 days. So when we know that the bigger time frame trend is bullish, then we can come in with the 15-minute time frame and look for more opportune entries. You can see, for instance, on the 15-minute chart that while price was pushing up back here last week into $22, $23, we had this strong bullish order block, which is this green level here, which we know will usually pull back into the block. And then from there, price will normally bounce. The reason that this happens is that institutional buyers, not you and me, retail, but institutions who have hundreds of millions of dollars, they will not just go ahead and hit the market order for 10, 20, 30, maybe $100 million worth of shares. They have to buy within specific ranges. And so when they were unable to fill entirely down at this $20 level, there is not enough volume to make this breakout happen until price pulls back into this order block. So as we pulled into the order block, we saw that all of the bullish people who came in before stepped in again. That's why price bounced. We pulled back into the order block once again. The bulls showed up, and now we have pushed up nearly 11% since we called this trade out. And I closed out my trade entirely. I'm not currently holding anything else. You can see here that if we go into the hood position, these were my executions. So I took my first position with 10,000 shares. That is a big position. It's about $300,000. But remember that percentages are relative to everybody. If you have a $10,000 account, 10% is still 10%, whether it's $10,000, $100,000, a million, or if you're roaring kitty like $250 million. It's all the same when you're looking at percentages, which is all you should be focusing on. So you can see that we entered with an average price of $21.38. We ended up closing out $5,000 of that position right at the open this morning. And so when we had that open, I actually sold. I bought back in with 5,000 more shares after the pullback. And then from that moment on, so you can see this actually a little bit better here. So as price pushed up, I sold some of my shares. I added back in down here at $22. That's where this order came in. And then from this point, price bounced. I closed half again here, and then my final half here. So I did end up missing, if I would have held, about another 1.34%. But I'm extremely happy because the thing that you have to understand is that there is a very high chance that price in an uptrend like this will push back to meet equal highs. So in this case, $23. But what we don't know is the expectancy of a higher high to continue to come in. This is why I close half of my trades usually at equal highs and then let the rest run. I want you guys to let me know what you think of Robinhood down below. Like I said, definitely check out our free course. It is completely free. You guys will learn everything about the market bias, how to use it, how to set stop losses, where to put your take profit. Thank you guys for all of the support. Make sure to check out our link in the description to join our private academy if you want access to all of my real-time alerts, all of my trading courses, and our private Discord community, and check out all of our free courses, which will also be linked below. Thanks for all the support. I'll see you guys next time.